Unicorn TV is brought to you by Symetria. Symetria offers ongoing liquidity management to attract and retain the best talents. Give your team the benefit they desire and deserve and win the competition over talents with Symetria.
Darga Velazi.
And I'm Ziv Kenan.
And welcome to Unicorn TV, where we discuss what's new in the private markets and meet with leading tech companies. Unicorn TV is produced by Symetria, provider of secondary liquidity solutions in partnership with ILTV and FinTech TV. And now stay tuned because coming up on today's show. Israeli company Yuvital is helping organizations improve the lives of their members. We'll take a closer look how. And how is one Israeli company digitizing the private markets? The vast majority of assets in the world are private, and these private markets are on the rise, yet they remain mostly offline. Well, that's where our next guest comes in. Onera is working to digitize the private markets, and joining us now to tell us more about this is Ami Ben David, founder and CEO at Onera. Thank you for joining us.
Hi.
So Thank
you very much.
Can you tell us a little bit about Onera? What exactly does it mean when you say you're digitizing the private markets?
So Onera is building a network that interconnects basically a set of companies around the world that are all working to digitize the private shares, private securities, and put them on blockchain platforms. Now, there are many of those. There are many sources of digitized assets. There are many destinations for digitized assets. And what we are providing is a network that connects everybody to everybody and enables online instant trade in private securities with the same ease that you have when you trade public securities. So effectively today, to buy private securities, a long process, can take weeks, legal fees, lawyers, secondary market almost doesn't exist. While in the public market, you can just go and click a button and buy Tesla shares. So we want to make private shares as accessible and as available as public shares to the buyer that are actually qualified to buy them.
So Lidar, Ami and Onera just released a huge announcement, and I want Ami to tell us about it.
Thank you. So we've been working over the last couple of years to bring together financial institutions and get everybody to work in cooperation and communication together. And yesterday we announced the basically Series A funding round for the company, $20 million with participation from JP Morgan, LRC Group, which is an asset management company in the real estate space, and several other investors to help us along the journey. So $20 million raise, a big milestone for the company, but also for the industry.
It's thumbs up for this amazing milestone.
A big milestone. Now I have to ask, why is digital technology going to change the private markets?
Well, think about the private markets as the biggest market in the world that still operates like we were in the 19th century. People still signing documents. Every transaction is negotiated separately, signed separately. If you want to find buyers, you have to start getting on the phones and calling people. It's just a very, very antiquated environment. And we're talking about ownership of practically hundreds of trillions of dollars across private equity markets, real estate markets, and just a whole selection of private markets that are today completely manual. Now, if we can digitize these markets, a few things happen. But you can look at any other digital revolution, like the digital revolution that helped for example, in movies and in music. This is the same digital revolution that is coming now to these private markets, where instead of spending 3 weeks to 3 months to sign a deal, you can do it at a click of a button, and it's done in 1 second.
Yeah, this is exactly, like we had records in the past, and afterwards, we start digitizing those songs, and now we have streaming, and I think this is basically the same revolution what we're speaking of now, And actually, Ami is the founder of this area of digital securities. Ami, can you tell us a little bit more about the GDF consortium which you established?
Within Onera, around when COVID started, I published a document that called for the industry to interconnect and work together. And this document kind of coincided with Zoom becoming very, very acceptable for financial institutions. Suddenly, we were able to bring together about 80 financial institutions to talk about how to connect with each other. We did it under the umbrella of the GDF, which is a nonprofit organization dedicated to advancing digital technologies in the financial markets. And the idea was to come in a non-commercial environment where everybody can speak freely and talk about how to connect to each other. Although everyone around the table were our competitors, everybody understands that a common protocol, a common, I would say, open source protocol is required so that everybody can trade with everybody. And this is the work that we've been doing over the last 2 years, which is now coming to fruition and about to be deployed.
All right, Ami Ben David from Onera, thank you so much for taking the time to speak with us today.
Thank you very much. Bye-bye. Bye-bye.
And now, Israeli companies are not immune from the economic downturn facing the world. And yet, despite some announcements of mass layoffs, Israeli high-tech companies are continuing to prosper and even grow. The details in the following report.
The worldwide financial downturn has not spared the Israeli high-tech ecosystem, as several companies recently announced mass layoffs. Social media giant Snap announced it will lay off some 30 employees in Israel, mainly from the company's R&D center in Herzliya. This move comes after the company announced it will lay off roughly 20% of its staff in an effort to save hundreds of millions in costs. And Israeli-founded Taboola announced it will be laying off 6% of its workforce, totaling over 100 employees. Yet, despite the mass layoffs and economic downturn, some Israeli high-tech companies are still prospering and growing. Israeli unicorn company Fireblocks, which developed a platform to enable every business to easily and securely support digital assets and cryptocurrencies, announced that its 2022 annual recurring revenue had surpassed $100 million, reaching this incredible milestone in less than 5 years. While Onera, which is working to digitize the private markets, recently announced a $20 million Series A funding, including investments from JP Morgan and LRC Group. And these are just some of the Israeli startups making an impact, proving that the Israeli tech ecosystem is still continuing to prosper.
And our next guest, Yuvital, is helping organizations improve the lives of their members. The company's digital health solutions are designed to drive positive behavioral changes tailored to each particular organization. Exactly how? Well, joining us now, Alon Silberberg, founder and CEO at Yuvital, with more. Thank you for joining us.
Thank you for having me. Hello.
So what exactly does Yuvital do?
Okay, so in Yuvital, we developed a customer engagement and loyalty platform, as you mentioned, tailor-made specific for different health organizations and insurance company, even big corporations. The special thing about us is that we used 3 different kinds of incentive in order to really help our members or the guys who use the platform to change their behavior. We use the financial incentive, the psychological incentive, the social incentives, and using all those, like this triangle of incentives, help us to really push people into a more healthy and active lifestyle in terms of improving their physical activity, even their sleeping schedule, how they drink water, how they eat, how they live their day-to-day life. And this is what is really make us, I think, exciting in our area of insurance and health organizations that are really sometimes can be perceived as a really maybe old school industry.
This is actually like a revolution. This is pay to move, pay to exercise. And actually, I saw more than one venture in this field. What is one named Sweatcoin? I don't know if you know it from the blockchain space, yeah. Which is actually pays you to move, pays you to do things, and I think this is a revolution. We're going to see more of these pay-to-move solutions.
Yeah, I think exactly what you're saying is how we see the future, because I think that if you're talking about, it's not just pay to move, it's pay to be healthy. Mm-hmm. Okay, so if you need to understand the market or the market problems today, when you talk about how you can make people more healthier and what if we will continue with living a not healthy lifestyle? So we understand that forget about paying you in order to move. Let's talk about, let's make sure that you're doing your daily exercise. Let's make sure you are practicing your mindfulness exercise. Let's make sure you eat right, you sleep right, you are in the normal stress levels that you should be, because this can save both the industry, so insurance company, reinsurance company, health organization, and us as potential users or member or part of the population, a whole bunch of troubles or money.
It's not like an altruist cause. They're actually making more money from you being less sick. You know,
exactly. The financial incentive is not just for us to live a more healthy lifestyle. Yeah. Okay, it's for both sides. So the insurance company will save tons of money. We're talking about the tens of billions of dollars each year by giving us the right incentive to live a more healthy lifestyle.
And how did you come up with this idea? Like, you know, where was it originated?
Yeah, so it's actually a pretty funny story, because the first concept of the company was born when I finished my duty in the army. And when you're in the Israeli army, so there is a lot of walking around, and when you finish with the Israeli army, you're all of a sudden thrown into reality or going upward and find out that most of us are basically sitting around all day and not doing anything. And when I start digging in and learning about what are the consequences of sitting and not doing anything, I realized that there's a huge negative impact of myself in particular, and also my family member, my colleagues, my friends, but not only on the population, but also on the side that's going to actually pay us at the end of the day, when we are going to have the diabetes, when we're going to have our heart attacks.
But I have to ask, you know, I don't know about you, Ziv, but I have a lot of apps on my phones, you know, health apps, mindfulness apps. I don't necessarily use all of them. I mean, are people using this? Does this really change people's behavior?
Definitely. So first of all, we are very, very into human behavior. Okay, and you touch the right and the accurate point of how you can make people engage with your product. And we are in the field of using psychological and behavioral economist theory, implementing within our solution in order to make sure that you do use our product, okay, and that you do engage with us on a weekly basis, on a daily basis even, and we see the behavioral change in the long term in terms of, you can say, if we're talking about, let's talk some numbers. So we can see an increasing of 50% in daily activity, or 90% in intense activity. Also, we are actually improving heart rates in rest and heart rates in action.
Alona, just, you know, we have like a minute left. I just want you to say a few words about the origin of the name Yuvital, because I know that's very special.
Yes, so Yuvital is actually the combination between two of my fallen soldiers, Yuval, Yuvi Dagan, and Tal Yifrach, who were killed in Protective Edge. It was an operation in Gaza Strip in 2014. And
an incredible tribute. Alon, thank you so much for taking the time to speak with us today.
Thank you for having me. Again, thank you so much.
We're back with our next segment, brought to you in collaboration with the Elephant Brokerage.
This week, we're looking into Noom, a developer of mobile health coaching software designed to provide intelligent nutrition and exercise coaching. The company's mobile application combines exercise coaching and artificial intelligence to deliver behavioral change programs, enabling users to prevent and manage chronic conditions such as obesity, prediabetes, diabetes, and hypertension. The company was founded in 2006 and is based in New York. To date, it has raised some $668 million.
As the IPO and SPAC markets are in decline, many are looking to secondary markets. That is, deals in which investors buy equity stakes from early backers, founders, and employees. But these transactions are often plagued with limited information and a lack of transparency when compared to publicly traded stock markets. So joining us now to discuss this issue is Avivit Ben-Avi, Managing Director at AST Private Company Solutions. Thank you for joining us.
Thanks for having me.
So first of all, can you tell us a little bit about AST and Estrella?
Of course. So AST is the second largest transfer agent in the U.S. They provide financial services to tech companies. Estrella is a subsidiary of AST. We have a software, cap table management software, and we try to give solutions to companies together with our partners from A to Z, from the day they're born until post-IPO.
So Avivit, I just want to tell you, Lidar, that Avivit is one of those Israelis that went abroad and came back with a lot of knowledge about private markets. She's been part of the Nasdaq private markets, right?
Correct.
And now she's with AST, which is one of the largest transfer agents in the US. And it's a fully owned subsidiary, Australia, which provides cap table management solution. And I wanted, to speak with you, Avivit, about the problem which you raised during your article in a Kalkalist newspaper regarding the transparency problems in private companies' secondary transaction, something we know fairly well. So can you a little bit explain about what's the problem that you see in that and how do you suggest to fix it?
Of course. So as we all know, in the last period of time, there's been a rough situation with the tech companies. There is inflation going on, increase in rates. There is challenges in supply chains, the war in Ukraine. And as a result, we see a change in the behavior of the tech companies. We see less and less IPOs and SPACs, and we see less M&A transactions. We see a lot of cutting in jobs. People are trying to reserve their funds for worse days, I guess. And if in the past the situation was that employees and investors are looking to liquidate their shares and options through M&As and IPOs, we don't see companies are staying private longer these days.
Exactly. But the data, by the way, is that if you go back like 10 years ago, it used to take about 5 years, 6 years for a company to IPO at a valuation of, like 1 billion or 2 billion. Now at a valuation of 4 billion, and after 12 years, I think these are the numbers. You need to reach like a minimum valuation of 4 or 5 billion before you IPO, and it takes just a lot of time. We know from our market, companies who's now decacorns, they have over $10 billion valuation, still privates, still with the same article of association, problems with liquidity, first right refusals. The market need to be reinvented.
Reinvented, exactly.
So what is the solution?
So what we see now, actually employees and investors need the money. They need the money to buy homes, to fund their kids' tuition, to help their parents. And the question is where the money comes from. So we see more and more secondary transactions in the market. And the secondary transaction means an investor comes in and actually buys those shares from the investors from the employees. The problem is that we don't know what's the value of these companies, what's the value of these options. How can you know how much the investor is supposed to pay for these shares? And when you look at it more, you see that the investors are actually very high worth net individuals who come with money, with experience. Sometimes they're very well managed funds. And they know the business. And on the other hand, we have the seller, who's mostly an employee, who doesn't know the financial books of the company, doesn't know how much the company worth, what's the forecast. Really, what he knows is the exercise price of the option. And the question is that fair? Do we really want to make a deal or transaction here based on?
That's a good point. And by the way, there's U.S. regulation that deals with tender offers. And those regulations clearly state that you need to disclose some information to the employee. And for example, with our product at Symmetria, we have a data room which the company can disclose financial reports to the employees and some business plans to the employees. So we go a long way to inform the uninformed about the transaction. I think this should be like the main core of what a secondary transaction is.
I agree, yeah. So I think that as long as we move forward, those secondaries need to happen more and more. And as long as they happen more, the management of the private companies needs to change the way they're behaving, and they need to show more transparency. They need to give more information to their employees. Employees need to know when they get options what the value of the option is. And one of the tools that those companies can use can be the 409A valuation. Those valuations needs to be reported to the employees. They need to know what's the fair market value of the options that they're being granted with. And I think the more companies will do that and be more transparent to their employees, the secondary market can grow more and more, and that can solve the problem.
All right, Avivit, thank you so much for taking the time to speak with us today.
Thank you.
And that's it for today's show. I'm Nadaga Velazi.
And I'm Ziv Kainan.
Be well, and thank you so much for watching.